Good morning, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is December 29th, 2012. Lots to talk about, so let's get crack-a-lacking. All right, so it is about 5:30 in the morning, Saturday here, and yeah, so I got my cup of coffee right next to me, and I'm analyzing some charts here. And I gotta say, pretty interesting stuff, and let me just get right into it. But as always, before I do, happy holidays to everyone. I know I didn't say it in my last video, but Merry Christmas, and I'm sure it's going to be a Happy New Year before I make another video. Special shout out to Favco. Thank you very much for your comment, and happy holidays to you too. I appreciate all the likes that you click, and I appreciate everybody's who takes their time out to watch these videos. All right, so now let's just get started. Let's see what's happening. Today's, or I wouldn't say today's, this week's action was very similar to something of a options of the same type of volatility that we will see during the week that options expire. Okay, so please forgive me if I'm a little bit groggy right now. I do apologize. And because I just got a new subscriber, I'm going to delete all my drawings here real quick. I'm not going to do a recap too much, but I'm just going to talk about what happened this week and why I almost took a trade but then decided not to towards the end. All right. So just looking at this chart here with no lines on it, we're just going to do a quick analysis and see what we can see without using the mathematical calculation, which is pretty important. But right now we're just going to look at what we can see without those types of tools. Okay. All right. So first thing we're going to do is grab a fib retrace here and see what we can see. We are right at the 50%. We kind of pierced and closed below it. We're going to head down to the 618, which is the 138.81. So I'm going to delete that because we're not going to, I really don't like the Fibonacci retracements too much. Just from what I can tell, we have a slight pivot here. It's not really a pivot because a pivot is after a down move, right? And we didn't get so much of a down move here, okay? Which is why we didn't take any trades on, or I didn't take any trades on that side there. But it is something to be considered and something to be respected, okay? So it's going to leave a line there. We have a gap window here, okay? And we also have a gap fill, okay? My gap windows and gap fills I like to do from the body. A lot of times you get the bounce from the actual lows and highs of the candle, but everybody knows that I'm more of a cautious trader, and that's what keeps me out of trouble. So we got the gap window and the gap fill, and then obviously we have the double bottom. So all of these points here will be pretty good support. Now there's a lot of talk about you know, the fiscal cliff and all that, and you guys have noticed throughout all my video analysis I rarely talk about those type of things. I try to stick to technical analysis purely because it keeps me out of trouble. I'm not a economist professional or, you know, politician or anything like that. So, you know, to be honest, unless I fully understand those things, it's gonna make my emotions, and basically technical analysis is how you read other people's emotions towards news that may affect the direction of the market, right? I mean, it really doesn't matter what you think. What matters is what other people think, because you can't move the market. If you're watching this video, I'm pretty sure that you can't move markets because you don't have billions of dollars. Well, of course, if you did have billions of dollars, then maybe you shouldn't be watching this video. But the point being, I try not to talk about the news too much because, you know, I just, based on the news, I mean, I've seen, you know, it's very similar. As an example, earnings seasons. I mean, a company can make a lot of money, and then you see, you know, have they beat expectations, but then you see the stock drop. Huh? You know, there's a lot of things that go into what direction the market will go to, including, not to mention, the manipulation that we constantly see in the markets. And you know, maybe I'll get to that in this video before I, you know, ramble too much. Let me just stop myself and get into an analysis. So we are going to have these support levels here, and yes, we do have the fiscal cliff worry, and that's why you see this drop here. But again, if you watched even not yesterday's, last week's video, you would know exactly what my plan was. I even made a comment in last week's video saying that I had my eye on a certain level. I think it was a 139.07 level, and those levels are important to me, and unless it gets to those levels with a reversal signal, I'm not taking the trade, and there's reasons for it. So let me just move back a little bit to right there, as if Friday never existed. And let me load my drawings here. You guys notice I'm not talking as fast as I used to. Actually, let me just delete all my drawings here. Alright, so let's just think of this. Well, okay, this is hard to see, so let me just zoom in here. Just imagine that this candle was in here, and we saw Thursday's candle here. This Thursday's candle, I mean, let me tell you, a lot of people went long on this candle here, okay? And I'm probably one of the few who didn't take this long trade. And yes, it could go higher. I'm not saying that that possibility isn't there. Nothing's guaranteed, especially in the markets, right? I mean, if it was, then nobody would be making money because everybody would be making the right decision. Somebody's got to lose money for somebody to make money. Okay? And the whole point of these videos is hopefully you guys can make money and take that away from the institutions who try to rip us small timers off. Alright, let me speed this up a little bit. Alright, so we created somewhat of a reversal candle here, which could be considered a hammer candle of some sort. We did have a down move of more than 3 days, which is good, and it validates this hammer candle reversal pattern. This hammer candle was also made and created on higher volume. Okay, so a lot of people, who actually do play reversals on volume, may have taken a long trade here. All right, but this is the reasons why I didn't. You guys know my rules, and for you new people, this is my rule. The volume has to be higher than the past 3 days. Okay, in this case, the volume was only higher for the past 2 days. Okay, not saying that it won't go higher, just saying that that's my rule, and when you have rules you need to follow them. If you don't follow those rules, then as a technical trader, it's going to be very difficult for you to make money in the stock market, simply because you'll be all over the place. You need to be consistent, you need to have a set of rules, and you need to follow them. Those are my rules. Past 3 days it didn't meet my requirement. Okay, in addition to that, we have these two moving averages right here, right above it, giving it a lot more pressure, meaning it's going to be harder for this thing to bust through these two moving averages. I don't really necessarily like that. You guys know that as well. In addition to that, I don't see how this reversal candle fell on any type of support. Okay, I draw a line straight across from the tip here, I draw a line straight across from the body here, and the only thing that I see as some sort of support is this consolidation area right here. Okay, so this consolidation area right here, or any pivot point, would be a good source of support, some sort of support or resistance. But it wasn't perfect in a way where, like, for example, let's just say we did consider this a pivot point. It didn't reach there. Okay, it didn't get there. Let's just say this was a consolidation, and we're gonna get support off of that. We kind of did, but we actually got that intraday support on Wednesday, not on Thursday. Thursday we actually cut through it, we bled through it, and then recovered and closed right above it. Okay, and this happened midday, or about an hour before the market closed. On the 10-minute chart, if you take a look at that, there's a lot of institutional game playing when you release the news that there might be a possible resolution to the fiscal cliff. But again, I'm not the type that wants to really concentrate on the news. I just want to see what I see in the charts, and that's it. Now, when there is a lot of news out there, what I normally do is, and if it's big news like the fiscal cliff, that sort of thing, like the news, like the situation that's going on now, you can still trade the markets. Or okay, well, let me pull this back a little bit here. I, in my opinion, will still play the markets. I just may not, and I'll still play it the same way as I do any other time. The only difference is I may not want to put that much more in, meaning not that much more. I may not want to put as much in. So let's just say I put, say, 10 grand in. Maybe I'll just put 5 grand, or if it's really bad, maybe I'll put 2,500. You know what I'm saying? So I'm just going to decrease the amount of shares that I normally would put in at a time like this, but I would still play the markets exactly the same way as I would any other time, whether there's news or not, except for earnings. Okay, so you guys know I don't play earnings, right? Okay, so now let me load my drawings here and then see what we can see. Let me just delete these lines here. I was just playing around with that, and let me just delete this line. It's getting a bit messy here. So I did another mathematical calculation. I don't know if I told you guys, but this 139.07 level here was created on December 21st. Okay, and then I also told you guys that until it gets to this 139.07 with a reversal signal, meaning if we got a candle like this that went into the 139.07 level, you know, on higher volume, which was higher than the past 3 days, then I probably would have taken a long trade. But because it hadn't done that, then I didn't take a long trade. I stayed out of the market and I let it bleed out, and that's exactly what it did. Minus $1.53 on the SPY. Okay, sorry, I forgot to tell you guys this was a chart of the SPY. Again, it's 5:30 in the morning. Sorry. Anyways, long story short, the reason why I want to wait for the 139.07 is we're gonna have some support here. Now this could be intraday support, and the whole thing about it is because of the fiscal cliff thing or issue. Okay, so there is a possibility that we may cut through and go all the way down to this 137.51, and this 137.51 was created all the way back in October 19th. Okay, and we only got when this was created, we only got intraday bounces here. Okay, as you can see that. So this support line is going to be good, but it might not be that strong. What I really think is going to be really nice is this 135.40, if we can even get there. Okay, so there is a possibility we can get all the way down there, and obviously there's a strong possibility, well, I wouldn't say strong, I should say a possibility, slight possibility, that we can get all the way down to the 130.31, but highly doubtful. I mean, I think they're going to come up with a fiscal cliff solution before then, but again, it's not really what I think, it's what I see, and therefore right now, because I have mathematical calculations all the way down at the 130.31 level, that is a possibility. Let me just draw a quick line over here. Yeah, so the reason why I didn't create an update video during the week is simply because my thought process has not changed. I would not have taken the trade until I had hit the 139.07, and it didn't get there. Okay, and we're coming pretty much straight down into it, so I may consider taking a small trade, a long trade, on the 139.07 level. Okay, so just keep that in mind, that that's a possibility. And what I'll normally do is pick up some I think it was SSO. Okay, and that will that is a 2-time SPY ETF. And now that I look at it, after drawing this bottom trend line here, this 137.51 level actually looks pretty good. Okay, that's going to be a pretty good level. It's right at here at this gap window. Okay, it's right around this consolidation period. I have a mathematical calculation here at 137.51 plus a trend line. Okay, so we're gonna have two support levels. We're gonna have the 139.07 level, which you have the 200 moving average plus this mathematical calculation, and this not so strong pivot point there, plus we have the Fibonacci retracement level here, which gives a lot of support. Okay, to 618. The 618 is probably the strongest of the Fibonacci retracements in my opinion. However, the 137.51 looks even better. So I guess it really depends on where I get that reversal signal. Okay, if I get it on the 139.07 or the 137.51. But I will say this: once we get to the 139.07 on higher volume than the past 3 days, I'm probably going to take the trade, because even if it bleeds through and cuts through the 139.07, we're going to have the 137.51 level right below it, and right below that is the 135.40 level. So where would I have my stops? If I take the 139.07 level and I get a close below that, I stop out immediately, because it's a $2 drop to the 137.51. I stop out of that once we get a close, not if it bleeds through it. Now if it cuts down to say 137.50 for example, but towards the end of the day it recovers, but it still recovers above 137.51, then I don't stop out. This is on close. This is based on a close, meaning at the end of the day, right before it closes, you can pretty much tell if it's going to close above the level or below. And if it's going to close below the level, then I stop out. I mean, it's as easy as that. And the reason for that is because there's a lot of market manipulation, especially now. Okay, with the fiscal cliff stuff, the institutions are just having fun whipping people out in and out of the markets. It's hilarious because I see how much they whip it up, whip it down, and it's just stopping people out, and they're like, oh no, whatever. And in any case, I just wanted to warn you guys that even though I said I'm looking at the 139.07 level, I'm still looking for a reversal signal. Normally, I would take the trade at the 139.07, but right now, because we got close to the 139.07, let's see how close we got. Down here was at 139.92. I wouldn't say it's that close, but it's pretty close where we could start consolidating to the side first. All right, here's scenario number two. We can start consolidating to the side there. Once we start consolidating, then this 139.07 is no longer something that I'm going to take. This consolidation could be like, a couple of days. Okay, if it starts trading sideways, which is a possibility because next week is another holiday week where we have New Year's. Once you have this consolidation, it could cut through the 200 moving average and hit the 137.51. If that happens, then I'm taking a long trade, okay, at the 137.51, and then I'll look for a reversal signal if it appears, and if it appears, then I'll hold on to it, and then have a 75% sell at the 139.07 and let it creep up all the way to probably over here. Okay, so that's pretty much it for the SPY. Let me get into some other things because I know you guys don't want to just know about what the SPY does. And I hope that was enough coverage for what my plans are for next week. Right, I think as a standard, I'm just going to normally do gold and silver. Okay, so this is the chart of the GOD, which is the ETF that tracks gold. This is a daily chart. Now, for gold is just something that I normally I used to play gold a lot. And what makes me really sick is that I actually missed this trade all the way up here from this mathematical calculation at 174.29, and I just missed it. The high of this was 174.07. Okay, so that, whatever. You guys know about that already. Whenever I see this, I'm just always makes me sick. And the only reason why I have this up here is to in case gold gets up there again, that's gonna be pretty good, a pretty good resistance level. Okay, I should have took it here actually. Anyways, moving on here. Oh, and by the way, we are not on the markets. We are not oversold yet. We are pretty close, but we're not. So that doesn't mean that we're gonna get a bounce, but there is a possibility. Let me just switch back. I normally give you guys the why I'm bullish and why I am bearish kind of thing. So let me just get that done real quick. Why would I be bullish? I would be bullish because, or it could go higher. I wouldn't say bullish. The market could go higher because of this reversal candle. Whether or not it was higher than the past 3 days, it did do it on pretty good volume, okay, especially for a holiday week, and it did create a strong reversal intraday, as you can see, and it created this hammer candle here, and it was after a down move, which means we could reverse higher. A lot of times, the only reason why we did this on Friday was what you would have to look for to negate this reversal candle is a close below it. We did not close below this. Well, let's see. The low of this candle was 139.92. Friday's low was 139.87. So, oh no, the Friday's close was 140.03. So we did not close below Thursday's candle, which means that this candle is still valid. This means that there is a possibility that we could go higher. I mean, we got the 50 moving average right here, but it's not gonna be major. The major moving average will be this 20 moving average, which is lurking right above there. So even if we did go higher, I don't know if it's gonna last long unless they announce a fiscal cliff thing, in which case I think we're gonna get one of those initial knee-jerk type rallies, okay, which knee-jerk meaning it's not gonna last long. Okay, so that's where I would see it going long. Would I go long now? No, I got you guys. I just explained these things here. Why would I be more bearish than bullish? Well, because this didn't happen on higher volume from the past 3 days, and we do have the 20 moving average right here lurking right above it, giving it some resistance. Okay, um, and of course, we have this down move, and there's no signal or indication saying that it's going to have any type of reversal anytime soon. So based on just Thursday's candle, gives it a lot of support that it may go higher. But just keep in mind that I would, even though I think that that might happen, at least into the 20 moving average, I still would not take the trade. And this is what keeps me safe. This is what keeps the institutions from trapping you, giving, there's those bull traps and those bear traps. um, this recovery here was based on news. Okay, it happened at about 3 o'clock when the news came out, and then boom, intraday this thing just spiked up. You got to watch out for those kind of things. Unless you get those appropriate proper signals, you don't want to take those trades. You want to be very cautious about those. Okay, so switching back here. All right, so this is GOD. Back to the GOD. We got this. This is what I mean. The 159.22 level. It's a mathematically calculated level. We got a reversal candle here after a down move, right? It was a pretty good down move too. It was not bad. Anyways, it was higher on higher volume here, higher than the past 3 days, higher than I don't know how many days. We didn't get much of a bounce. However, if you had picked it up at the 159.22 level, you would have had a break-even stop, and you would not have been stopped out just yet. Okay, so we went right into, we pierced the 200 moving average. Let me just zoom in. We pierced above the 200 moving average. We could not hold it. We came down and closed right on the 160.70 level. I'm sorry, 160.71 level, and then we gapped below it and then broke above, and then now basically we just, on Friday, now we broke down the 160.71 level, and then we're just basically trading sideways. That's pretty much what we're doing. This could be the turn to a higher move, but again, the 20 moving average and the 50 moving average is lurking right above, so there's a possibility that this rally may not last long, but that remains to be seen, which is why I haven't taken a trade on the GOD just yet. Alright, the SLV is the ETF that tracks silver, as we all know. And if you checked my previous videos, you would know what these lines are. It's almost picture perfect. But just to give a quick review, because I know I got some new subscribers. This triangle here was created, I don't know when, a while back. But you long-time subscribers already recognize this, hopefully. The way I get a predicted amount of how far this could potentially drop or pop, okay? It could go either way because this is a symmetrical triangle, keep that in mind. But in this case it dropped, and I think when it dropped is when I created the triangle. So I think I created the triangle maybe around these 2 days here. You get the middle of the triangle, the closest to the pivot point, the closest pivot point to the middle of the triangle, which in this case would be here. Okay, you grab that and you put it where the breakdown would be, and that's what you get. And then interestingly enough, in addition to that, I also have these 3 mathematical calculated levels that that are slapped on this chart back in December 14th. And I said there's a possibility that we get all the way down to this 2773 level. Would I short it because I think it's going to get there? Probably not. Would I go long if it gets there? It depends on the pattern, but yeah, that's probably something that I might do. Now, ever since 12.13, it's just been dropping. Okay, we got a bounce here at the $30.11 level. It didn't even get to the 200 moving average, and then it went a gap down all the way into the 28.75 level, and now we're just consolidating. Okay, so based on this pattern here, this is bearish. Okay, SLV is bearish. Would I take a short trade on this bearish consolidation pattern? Absolutely not. You can if you want to, but in my opinion, I stay away from consolidation patterns, because for whatever reason, when it comes down to consolidation patterns, 1 out of the million consolidation patterns is the one I'm going to pick, and then it's going to reverse on me. So I just don't play it, but I realize that it's there, and I wait, and I'm patient, and I have to discipline myself and say, okay, this is what the pattern's looking like. I'm going to wait. until it gets down to the 2773 level, in which case I may actually take a long trade depending on what the pattern looks like. For example, if we come down to the 2773 level, almost gets there, but then it consolidates again, then I'm not taking the trade, and I'll have to recalculate to see if there's another calculated level that I can potentially do. Over here will be another support level. Obviously this is going to be a support level here on your pivots. This is going to be a pretty good support level here. I don't know if it even gets all the way down here, but anything's possible, right? So long story short, if it gets to the 2773 level, it doesn't mean I'm going to take a long trade, but what it means is my eyes are going to be open. They're going to be wide open, and I'm going to look for a reversal pattern type candle combination, or single candle pattern, or something of that sort. Okay, that's the SLV. Last but not least, we have Apple, because Apple is the leader in the tech sector, right? We all know that. We have this bottom trend line over here. I do have a level here at 476.39, and we also have a trend line here at the same time. So if we get to the 476.39, bam, just like that one time, then I may consider taking a long trade on Apple. Now keep in mind, this Apple is a very expensive stock. Do not, I don't doubt that, okay? Here's the thing, though, with this is that I remember we were talking about Apple all the way up here when it reversed and started coming back down. Here's the thing. Let me just get rid of this. Alright. Everybody at this level here, everybody was saying Apple is going to reach 1,000, and didn't even get close to 1,000. Alright, so just keep in mind that this is why I have to stay disciplined. This is why I gotta turn off the news, because the news is gonna make you emotionally change your mind. Okay, anyways, the 476.39 level, yes, the stock is very expensive. You probably can't buy as many shares as you could with the, say, SSO or the SDS, but this stock also moves a lot more than SSO and SDS. I mean, you have an average of 1320 per day. Okay, so that just means, I mean, I've seen this guy move 30 bucks in one day. So say you only had, I don't know, 50 shares or something like that. I mean, the amount of income would probably be similar to what you would have made in the SDS anyway. So it's just that Apple moves a lot faster. Sometimes people like it because it's a little bit more exciting and there's a lot more volume in Apple. But again, just because we get into this one, the 476.39 level, doesn't mean I'm going to take the trade. It really depends on the pattern. Not to mention if there's going to be a reversal signal. There's a couple ways that I play these things, and I think someone asked me how I actually played it. So let me just explain. Sometimes I'll take the trade at the 476.39 level and see if there's going to be a reversal pattern created on that day when I take that trade. When a reversal pattern isn't created and it looks like a continuation pattern, then I stop myself out for a break even, or I stop myself out for a small loss. That way I keep my losses small, and that's the whole point of trading, is you want to keep your losses small, right? And if it does create a reversal pattern on the 476.39 level, let's just say for example, then I lock in a break even stop, because we would have obviously gotten a bounce. As soon as I have a break-even stop in place, then I wait for the next day to see if I get stopped out. If I get stopped out, no big deal, and no sweat off my back. But if it continues higher, then I put a in the money stop. That way, even if I do get stopped out, I make money. And then as the market goes higher, I trail my stop higher and higher, and I let the market stop me out. I don't care. I let the market stop me out. But once I see it hit a resistance point, then I'm pretty sure it's gonna reverse, or there's a higher probability it may pull back, and then I will take 75% off of shares, and then put a break-even stop on the remaining 25%, or in the money stop, doesn't matter which one, and I just set it and forget it. I mean, I don't need to worry about that anymore until it hits one of the major points. For example, if I take the 476.39 level here, then we're going to have resistance right here, and then we're going to have resistance right around here, around this area over here, and then maybe I'll take 75 maybe I'll put a in the money stop here, then maybe I'll take 75% off here, and then maybe I'll take the rest of the 25% off here. And if it never reaches this pivot point up here, which is the remaining 25%, and we pull back, we come back down here, I stop out in the money on the remaining 25%, no problem. But that's when you can get greedy. If you take the trade up here and then you trail your stop all the way up here, you take 75% off, you can get greedy with the 25%, and you really don't, it's no stress or anything, and that's normally how I play it. Alright, so we're into 30 minutes of this video. I really didn't think it was going to take this long because I wanted to get it over in 15 minutes, but I also don't want to miss anything, and I want to make sure that I explain myself to everybody. Again, this is just my opinion. I'm not necessarily saying this is something that you need to do to make money. This is just my style. I'm just letting you guys know what's going through my mind, and obviously if something does change, then I will create a video, or hopefully we'll create a video during the week if something changed. But just like this week, I mean, it was a nice reversal pattern on the SPY with that long hammer looking type candle, but I still didn't take the trade, and sure enough on Friday we dropped even more. So, and then that's one of the reasons why you need to follow your rules, because those guys who went long are right now underwater. Okay, not saying that they can't go long on Monday, because that's definitely a possibility, but as a technical trader, you have a set of rules. If you don't follow those rules, in my opinion, it's going to be always up in the air. And if you base your trades on emotions, some people do, and they do great at it. Okay, I'm just not one of those, and so I have to be consistent, and I have a set of rules, and those are the rules that I have to follow. In any case, happy holidays to all of you watching these videos. Happy New Year's, and God bless to you all. I hope, good luck to your trading next week. If you're even trading, there's a lot of traders out there that's not even trading this month. Well, keep in mind that we do have a possible Santa Claus rally, maybe not in December, obviously, because it's over already. Anyways, but probably the beginning of January, if you even want to call that a Santa Claus rally. But towards the January time, maybe the beginning of January, may have a quick burst of upside rally, but I do think that the markets still do look a bit weak. But on the weekly, we are still in a verified uptrend. So until that changes, I gotta be more bullish than bearish. And anyways, I'm rambling again. Thank you very much for taking the time out to watch these videos. You guys have a good weekend, and Happy New Year. Stay safe, and God bless to you, and I hope to see you in the next video.